What's up, everybody? Welcome back to Sales Remastered. Welcome to the week of January 15th. Today is Monday morning, and I want to dedicate this entire week to short little sales videos that are going to be geared around rebuttals to the objections that we face and the objections that we meet. This is one of the most common type of inquiries that I receive to the help@salesremastered.com email address from my audience. And I had one follower just actually sent me over a list, and I'm definitely going to make it a point to address those objections. He had mentioned that he downloaded my script, which if you haven't done so, by the way, you want to go to salesremastered.com and enter in your name and your personal email address, and you'll get a copy of the script for free, no charge. And he asked me right after he got the script, he's like, this is great. It opens up the call. It allows me to frame the prospect for the pitch, and it helps me take control of the conversation so that I'm not wasting time answering objections right up front without even having the right leverage to properly answer the objections at hand. And so, he got past that. He got past the objections, but then he started coming up with things like, hey, what if this person doesn't need a lower rate, or they don't need, debt consolidation? Like, what do I do with this person? And that's definitely something that we're going to be running into 2018, because the market's just in a little bit of a different space. And so we got to get creative in order to sustain our refinance business. And, again, his inquiry was for those that I talked to, because the script allowed him to at least extract the right information, right? Before he couldn't. Before, he had a lot of resistance right at the very beginning. Like, he would always get hit up like, hey, what's your rate? What's your rate? What's your lowest rate? And so then I helped him, and I helped him get past that. If you haven't seen that video yet of how to address that, check out the links below and check out the playlist. But going to this inquiry is all okay. Well, I got past that. How do I handle the person that literally does have a low rate and they don't need debt consolidation? And so I'm going to answer that for you. Number one is that the last thing you want to do is try to be aggressive with them, right? And sometimes we get in that way because we feel like we need to make a sale. Us as salesmen, we always have a quota to hit. It's the never ending, it's a never ending grind, right? We always got to hit our quota for that day or for that month. And sometimes this can put us in a predicament, right? Like we're really gunning for a unit, and sometimes we just need that momentum just to get us started so that we can get out of a slump. And the reason why I'm bringing that up is because these leads are qualified. They're qualified. They may not necessarily buy today, but they are qualified to buy at some point in the future. And so the best thing that you could do is make note, update your CRM, make sure you update it with the current interest rate, current loan program, but then start asking certain things. Like the second that you notice that their rate is low, or, that they paid off all their debt, they got a strong FICO score, you got to start asking other questions to be proactively seeking to kind of corner them like a prospect. And I don't mean like corner them like you're going to bully them. What I mean is you're going to plant your questions in a way so that you can use the answers later so that you could sell benefit. Let me give you an example. And so let's say I got Mr. Smith. Mr. Smith is a 790 FICO score. Mr. Smith has, let's say, 50% equity in his home, right? He's got a 2.5% 15-year fix, and Mr. Smith has no debt. Obviously, his credit score has got good equity. And so what would I say to Mr. Smith, right? And so Mr. Smith got this 15-year fix. Let's say he got it 2 years ago, right? 3 years ago. So he's got 12 years left. And I would ask certain things of Mr. Smith. Like I would ask Mr. Smith and say, hey, number one is I'd pay attention to his date of birth, right? And sometimes you don't know his date of birth because depending on when you ask that question, like, hey, what's your date of birth, what's your social, you may not necessarily be equipped with that. So how do you tell someone's date of birth? Well, number one, they're going to tell you, certain things that they do, like if they earn fixed income, right? Or if they're currently working, it's safe to say, that they may be on a fixed income, then they're about 65 or older. But if they have been employed with someone, or they're currently employed and they sound a little bit older, ask them how long they've been in that industry, You know, if they say like 30, 40 years, then you can kind of put two and two together. But you don't necessarily need to focus too much on their age or their date of birth. Where I'm getting at is you have to start asking questions like, what's the long-term goal with this house? You got 12 years left on this home, Mr. Smith. Do you envision yourself 12 years from today walking out to the mailbox? And you know, I like to say that because if they're older, then they'll put them in perspective. They'll really kind of hone in on the reality of the subject, right? And so if Mr. Smith's 78 years old, then 12 years is going to be 90 years old to him. So I'm asking him to say, hey, in other words, when you're 90 years old, do you envision yourself walking out to the mailbox to see that statement of a zero balance? Like, is your goal mainly to pay this off in 12 years? And most of the time, Mr. Smith is going to say, hey, Sonny boy, I'm not going to be around in 20 years. You know, and this is an extreme example of someone who's retired. And I'll give you an example of someone who's not retired. But Mr. Smith, I'm going to ask him, you know, well, when do you plan to have this house paid off? So if I find out that his goal isn't to have this house paid off, but instead to pass it to his kids, then I'm going to find out what his emotions are with leaving his kids with debt, right? And so if I know that he has 12 years left and say, hey man, is your goal to put the burden of another mortgage on your son or on your grandkids or whoever, you know, holds the trustee? And he'll answer me he'll answer in a specific way, like, whatever they plan to do with it, they can do with it, whatever. And say, okay, great. Well, let me ask you this, Mr. Smith. On a scale of 1 through 10, 10 being the absolute best condition, what you envision this property be, let's say if you sold it tomorrow, the absolute best condition. On a scale of 1 through 10, how do you rate the current condition of your home? And every single time I've ever asked that question, I've always gotten the answer back of 7 or 8, right? I've never heard anyone be cocky enough to say, I got a 9 or I got a 10, unless it's like a brand new home, right? And even then, if it's a brand new home, it's based on their individual perspective. And so if they could have a brand new home, but to them, they still believe it's an 8 because they still need to do things. Anyway, the reason why this question is important is because you're trying to nail them down to a number. And let's say Mr. Smith says 7 and say, all right. And in order to make the home a 10 or to put it in a condition where it would be rated a 10, what do you think you could do to the home? And then Mr. Smith is going to start listing off every goal that they've ever had in the last couple years with regards to the home, right? And so Mr. Smith's going to think about that pool that he wished he would have put in, or Mr. Smith's going to think about Mrs. Smith wanted a sauna in the garage, or maybe the new siding that's needed on the house, or maybe the new air conditioner unit, or maybe the new kitchen, right? There's always something. And you know, this question is something that's going to open up their idea. And so when they list out all those things, then you can ask them and say, hey, well, how much do you think that would run you? Like, you know, in order to make this house a 10, that seems like a pretty big, you know, project. How much do you think that project would cost? And so now Mr. Smith's I don't know, maybe $30,000, $40,000. And so now you already have this mental note. You're not going to just jump in and start selling them. It's like, hey, well, why don't you pull cash out? You know, you got to build up the excitement. So instead of hitting him with 1 point of leverage, you're actually hitting him with a combo, like a combination, right? I'll give you an example. So after you find out that, you know, he needs about 30 grand, then you start pinpointing the payoff time and say, okay, great. Well, you know, you've got 12 years left on this loan. If I can show you how to improve the term for you, not your kids, not whoever you plan to leave the house with, but just for you, would you prefer to see a lower payment, or would you prefer to have this house paid off so that you're not handing your kids any burden of more debt? And depending on the answers, then I'm going to start filtering, but I'm going to combine the two. I'm going to say, okay, you know, and I'm going to do it very politely. I'm not going to be aggressive, because in absolute least case, what I can do with Mr. Smith is actually network with him and make sure that I'm his go-to guy if anything changes. And Mr. Smith's really going to appreciate me, and the likelihood of him sending me a referral or sending me any of his family or friends is high, because Mr. Smith appreciates how I took the time to make noise in a different way. Mr. Smith appreciates how I, you know, was able to assess the situation for what it is and not force feed him or force sell him on some program that everyone else is trying to sell him on, which is a payment deferral and escrow refund. You know, so these are just the subtleties that you have to do. But to answer your question, like, you know, what do you do when you reach someone who's who's in that state where they're in the lowest rate. They already got, you know, the lowest rate per the market. They don't need any debt consolidation. You know, they're on good terms. What do you do with them? Well, number one, the answer is that you find out if they could use any cash out for home improvements or any projects. There are so many things that cash out could be used for. We ask if they need cash out for debt consolidation, but we never ask them questions that will open them up to determine if they need cash out for traveling, for construction projects, for investments, for bailing out their family, for assisting their family, for tuition, for college debt, for asset depletion that they need to replenish. And so, you know, these are certain things that you can ask them to see if you can help fill that void. And not every single one are you going to find a solution for. You know, these people are responsible. They did what they needed to do, and they executed as they should. But it does not mean that you kind of, you know, there's a tonality when you deal with someone that you know they don't qualify, or you know that you can't give them anything. Like there's that tonality where it's, hey, all right, well, all right, okay, all right, later. You know, it's like you're the classiness just fucking shut out the window because there's no way to make any compensation from that contact. And I think that is an important piece to pay attention to, because you want to leave with a good impression. You want to leave with that TBD, like that to be determined, like, hey, you know what, let me get back to you. I got some ideas, let me run it by. And, you know, whether you give them a call back that day or a week later, at least it leaves off like, okay, well, Daniel's a good guy. He's going to go check out something. He didn't try to sell me. He didn't try to force feed me. What Daniel tried to do is just give me a solution to see if he can help me. Whereas all your competitors, they're going to try to force feed that dude. They're going to try to force feed Jim into, you know, debt consolidation and a lot of smoking mirrors. And when you make noise in a different way, you start to build equity for your name, and your name becomes your brand, and your brand becomes that thing that people buy into. And I think that that's important. So on the flip side, if it's a young dude who's not even retiring yet, and this guy's just got everything in line for him, you know, I'm going to find out his long-term goals. So if the intention is to pay this house off and eventually keep it as an investment property, I'm going to position him to do so. If I find out that he may not have credit card debt, but he could have timeshares or student loans or car loans, etc., I'm going to ask him certain things about his net. In case you haven't heard of, his net is, you know, you have your gross income, and then you have your net income, which is basically after taxes, after retirement deductions, after everything that's taken out. But the net is how much of the net income after all of the expenses are paid. So if you make, let's just keep it easy figures, if you make $100 net after all your taxes, etc., and you're going into, let's say, February, because that's the next month, right? So after February, you made a total net income of $100. How much of that $100 is left going into March? So after you pay your gas, after you pay your electricity, everything that I don't see on the credit report, how much of that is left? And that becomes the net. And so the reason why that's important on anyone, not just, you know, this example, is that everyone needs some sort of solution to create some sort of cash flow. And on the exterior, when they come out and they actually just ask you for something, a lot of times they just say, I'm looking for your lowest rate. But we actually have to open them up. We have to peel back their whys as to why they want a lower rate. We already know it's because they want a lower payment. Why do they want a lower payment? We already know because they need savings. Why do they need savings? Well, we're going to discover that it's because of their credit card debt, because of their depleted assets, because they assisted their brother to do A, B, and C on their home. You know, there's just so many things that life consists of. But we just have to get creative and understand when they ask for their lower rate, or when they're asking you for the lowest rate you have, what they're asking you really is, how much money can you save me? And we need to go in and apply and say, okay, well, let me ask you a few questions first. Let me make sure this is right for you. You know, and of course they're going to ask you, well, what's your lowest rate? Don't be afraid to yell out your lowest rate. You know, if I had a 10-year fix and that thing was going for 2.5, I'd say, well, my lowest rate's 2.5, but I need to make sure you even qualify for it. And I'm genuine in that statement. I need to make sure they even qualify for a 10-year fix, right? And when you answer that question, like, well, what's your lowest rate? You have to give it a pretty big window, right? So that way it's not clearly defined. Meaning that if I have a 10-year fix at 2.5, and then I got a 30-year fix that goes all the way up at 4.25, I'm going to say it like this. Well, what's your lowest rate? Well, ma'am, I got programs that go from 10 years to 30 years and all in between. To be honest with you, it's anywhere as low as 2.5 all the way up to above 4. So what I'm going to do is find out first what you qualify for, so that at least you know what questions to ask, and you know how to be prepared in identifying which one is best suited for you. But I wouldn't want to put anything in front of you that you don't qualify for, because that means I'd be wasting your time and I'd be doing a disservice to you. So because we're in a time sensitive market, I'd like to show you only what you qualify for. And if it seems like something that you want, I could show you how to get it. But if it's not and it doesn't suit you, then no harm, no foul. You didn't pay anything. If anything, you're just going to get the answers that you're looking for, and you're going to save a bunch of time. That's how I'd answer it. So keep that in mind. I hope this video helps. Leave your comments below. Let me know what your technique is to that objection, or at least that situation where they already have the lowest rate, they already have the lowest payment, they already have paid off their debt, they're in good standings. What would you do with them? My recommendation is that you farm them. At some point they will need you, or at least keep them in your CRM, keep them in a drip, so that hopefully they forward your contact information to their neighbors, their friends, their family, their kids, their grandkids. And so it goes on and on and on, right? And then when that time comes, if I need to flip them to Mr. Smith or Mr. Jones to a reverse mortgage, then we got the answer for that too. There's a home for everything. You just got to be open-minded, not necessarily be shut off when you hear, "What's your rate?" I'll see you on the next video. Bye.